If you are a trader, then most likely you have heard of the Ulcer Index and the Ulcer Performance Index. And no, this is not the ulcer that you suffer when you are losing money. This is a risk-adjusted return measurement that you can use it actually to compare different trading systems. Now, it is a much better measurement than Sharpe ratio, which is widely used. And I did a video on Sharpe ratio, and if you want to watch it, then there is a link in the corner above. In this video, I will explain to you what is the Ulcer Index and the Ulcer Performance Index and how you can use it to compare your trading systems. So let's start. Hello everyone, my name is Ali Casey. Thank you for joining me on StatOasis channel, where we discuss finance, investing, algorithmic trading, and everything else in between. If you are new to this channel, make sure to subscribe, hit the notification bell so you don't miss any of the amazing content that I post daily on this channel. Also, it would be great if you can smash the like button, share the video with others, as this will help me grow the channel. It will help Google push the video to others. The Ulcer Index was developed by Peter Marine and Byron McCain in 1987, and it is used to basically compare trading systems' performance to each other. So you have a standardized way of comparing trading systems. Because like I mentioned before, the Sharpe ratio really, it does compare systems, but it has many drawbacks, and mainly it penalizes the upward deviation from the mean, while as traders we don't care about the upward. In fact, we welcome the upward movement of any trading system. What this says is basically that if you are making $1,000 and $10, for us traders, it's also good. Both of them are good. Both of them are making money. But for the Sharpe ratio, because the $1,000 is a lot different from the $10, even though they're both up, it penalizes that in the calculation. So this is how the Ulcer Index is calculated, and it uses a period. So here the example is 20 period. Basically, the Ulcer Index measures the drawdown only, and that's its main concern. It's the drawdown. And for us traders, really, that's what we care about. We care about how deep is the drawdown and how long we are in a drawdown. And the Ulcer Index captures that part. It doesn't care about how much money you're making on the upside. It only cares about your drawdown and how long till you get out of drawdown. So this is an example of 20 period Ulcer Index. You usually you measure the drawdown, so the close minus the highest high of the 20 periods divided by the highest high of the 20 period times 100. So that's the percent drawdown. Then you sum all the percent drawdowns for the past 20 periods and you square that. You divide it by 20 and you take the square root of that. And that is the Ulcer Index. The Ulcer Performance Index, it replaces the standard deviation with the Ulcer Index. So this is actually the same equation for the Sharpe ratio, except we are replacing the standard deviation with the Ulcer Index. Now, the Ulcer Index is a unique way to calculate. It's not very, it is popular in some hedge funds, but really in the industry, in the financial industry, everybody uses Sharpe ratio, which again, it is a bad way for us investors, traders in the 2000s and up. But for the old generation, they all use Sharpe ratio. As I mentioned many times now, it penalizes the upside movement, which we don't care about. In fact, we welcome the upside movement. The best site I found on the net to compare the Ulcer Index with the Sharpe ratio is this one. So here you can get a much better idea. Imagine we have a buy and hold system on the S&P 500 and a timing system. So a timing system is just a momentum system. Basically, you buy when, let's say, the close is above the 200 SMA, and you sell when it's below. And we can find that the Ulcer Index for the buy and hold is 8.85. Remember, the higher the Ulcer Index number, that means you have a lot of long drawdowns. And of course, because the Ulcer Performance Index, remember, it is using the Ulcer Index in the division part. So that means we need a higher UPI index. So the higher the UPI, the better the system. And here we can see that the buy and hold have a 12.9% annualized return. Of course, this depends on when you measure it. And the trading system, the momentum system, it's 14.79. So it's higher, making higher returns. But the Ulcer Index here is 8.85 and here is 5.14. What that says is here in this system, we have less and shallow drawdowns than this system. And also the performance index here is 0.92. And as I mentioned, the higher the better. And here we have double the UPI number, which means we have a much better system in terms of drawdown and return. And here we have the standard deviation, which is 16. And this measured the standard deviation up and down. Here we have lower standard deviation, and this is the Sharpe ratio. So the higher Ulcer Index, the worse the system is, because that means we have long, deeper drawdowns. The higher Ulcer Performance Index number, that means it's good, because now we are dividing the returns by the Ulcer Index. So the higher the number, the better the system in terms of risk-adjusted return. And this is a much better way to measure a system than the Sharpe ratio, because we do not penalize the upward deviation from the mean, meaning the profits. Also, I just want to point out that you can use the Ulcer Performance Index or the Ulcer Index as an indicator. And this indicator is not available in many trading platforms. So if you have it, then you have an edge over other traders that they don't have it. And here I can show you, this is the Ulcer Index with a smoothing. So this is the Ulcer Index on 14 days with a smoothing 14 days. The breakout level is 1.5 and the signal smoothing length is 52. And this is the indicator. And also we have it here in Algo Wizard and StrategyQuant X. So if you type Ulcer Index, you have Ulcer Index down below safe level, and Ulcer Index down is rising, and Ulcer Index up below safe level, and Ulcer Index up is rising, and then just an Ulcer Index, because it have two components, the up and the down. And then of course you can use period, and this will actually also be available in the building block, so you can use it here in the building blocks to build your system. So there you go, unique way to build a strategy using the Ulcer Index indicator, because as I mentioned, it's not available on any platform. Also, make sure not to use Sharpe ratio. Instead, use the Ulcer Performance Index to compare your trading system, because as a trader, you should only focus on the drawdown and not the upward deviation from the mean. As always, if you have any questions, any thoughts, please do comment below and I'll be more than happy to answer them. And if you want to continue the conversation or have more questions, deeper questions, then you are more than welcome to join the Discord server through the Patreon link down below. As always, good luck with your trading, good luck with your investing, stay safe, and I'll see you soon.